good job or own a house.
8 million Venezuelans voting for this assembly, saying it's actually less than 3.
It is. And people are going to start rioting in the streets.
Was reported to have asked Putin for military support that would help him stay in power.
We will make America safe again. And yes, together, we will make America great again.
And they ignore him. And 8 more years goes by till Bernie himself finally admits to his sons, hey, I've been running a Ponzi scheme.
Does its dominance mean it can use the alliance for its own ends?
Since 1981, bond yields, also known as coupon rates, have just gone down and down and down.
The Federal Reserve note will be your biggest financial liability.
RTD Live Talk. We're live. It's the 27th day of the month of December. Looking forward to finding out what's on your mind, and more importantly, doing more of a follow-up based upon the last couple nights back and forth in reference to what's happening with the equities market. So it's very interesting that once again, as I kind of hinted at last night, what we could expect today, and I think it came true. So we'll talk more about that. But as always, my name is Mike, the host of RTD Live Talk, Detroit's #1 late night YouTube talk show. Looking forward to finding out what's on your mind this evening. As always, there's a number above my head, 1-833-LIVE-RTD. That's for you to call in and to join the conversation. And more importantly, any new viewers or whatnot, let me know where you're watching from in the chat box next to me. And I would love to give you a shout out and acknowledge your presence this evening. So, with that being the case, before we dive in any further, let me find out who's joining us. So we got Spirit, we got Kevin, Hernan, Kryptonium, we got here Student of Life, Dino, Craig, Brando, okay, Jeff. And so Jeff sent us an article off first thing of the evening. And so for those who do not know, Jeff is an official RTD news contributor here with articles. So Jeff, I always appreciate you staying on top of these things. So we're going to get to that in a minute. And so one thing I wanted to pull up as we get as we actually get into tonight's conversation, I wanted to just start off. Because I had to share this just because it's very timely, but let me actually pull it up here and let you see what I am seeing or actually saw throughout the day, because I had to actually check this out for myself. And so here we have so at the end of the day today, once again we were in the red. Wasn't looking too nice for the current uptrend as of yesterday's single day record high, but it was followed by a dip today at around 2:15 or so p.m. according to this chart here, and it actually got down to about negative 607 points for the day, and then right after this 6:02 time frame, it just basically went up within an hour 45. And so, as you guys see, as I just scroll through this thing with my mouse here, over time, this thing just went up and up and up. And so it's 400, 300, 300, and it got down. Then it's 200, 250, and right on up to 175, 117, 73, 49. And then, of course, you guys know how it ended. It got right up here into the green, and it ended at about 260 on the day. So that was roughly an 867 point swing all in one day within an hour and 45 minutes. So once again, the question to you is, who's out here purchasing in particular the Dow Jones? And so a lot of people, include myself, because I'm not heavily invested in these type of markets here, I was actually wondering, let's look at some of the companies that actually are in the Dow Jones. And so to find out the top or the 30 companies that are listed that makes up the Dow Jones Industrial Average, I actually, before I went online tonight, did a little homework to find out exactly what companies are listed there. And so we have a call here. Let's find out what's going on. Hello, caller. What's your name? Where you calling from? Hello, caller. You on the air? Anybody there? Going once, going twice. We're going to let it go. So try to call back and we'll get you on here. And so, got a couple phones going off here. Let me end this one here. So feel free to call back and we'll get you on here. But I wanted to dive into this a little bit further. And so let me see if I can find that where I was looking at earlier. But yet the 30 companies that make up the Dow Jones Industrial Average, of which I was looking through the list of 30, and I personally wasn't a big fan of them to where I'm like, I would want to really partake in that for a long period of time. And out of the 30 companies, only 2 are long-term companies. One was General Electric, and the other one, I think that's old because General Electric was just delisted from the Dow Jones, I believe. So, and another one was a tech, health tech or something from 1939, but everything else was relatively new. So a lot of those companies didn't really appeal to me. So I would imagine that a lot of people who are, invested in equities don't really know what they're probably holding on, especially when it comes to these index funds. So that being the case, feel free to call back. We'll get you on here. Let's dive into some questions directly from the chat. Then I'm going to get to Jeff's article. And so it says, hey, Mike from the west side of Detroit. How you doing, my friend? I got a call. Let me go ahead and pull this call up. I apologize. Yep, give me a call back and I'll get you on here. I apologize. It says, what else we here? We got a fellow Detroiter here. How you doing, my friend? Welcome to the channel. It says, Dano said the plunge protection team strikes again. We got, who else? James says, hello, how you guys doing? Question, did you read the article where experts say the Dow will go down to 18,000 points? I did not read that article, but it does not surprise me one bit that it would go down to a lot lower than 18,000 points. And as always, I watch Fox Business more than anything just to find out what the narrative is going to be for the events following the close of the stock market. And of course, they find new people all the time that are trying to give their 2 cents on what they believe what should be considered financial advice or sound advice, of which I personally just didn't believe them today. So, hello, caller. What's your name? Where you calling from?
Hi, Tate in Ohio.
How you doing, Tate? What's on your mind this evening, my friend?
Yeah, I just wanted to call in about specifically the stock market.
Okay.
I was a broker for several years, and I still am a derivatives trader.
Okay.
And something that we all don't realize, and I honestly just came to this kind of conclusion recently, it's the manipulation of the stock market is not very far off than the manipulation we see in the silver and precious metals market. It all has to do with the futures.
Yeah. Now, for those that are not familiar with the details behind that, shine a little light from your background on how that works behind the scenes in reference to the futures, as you just mentioned.
Okay, so the futures are basically, it's truly like the main derivatives market of all derivatives markets.
Okay.
So let's say futures silver, for instance, it's paper contracts that are traded, between banks, between hedge funds, between whomever, and essentially they drive the price of silver, gold, oil, whatever the case might be.
Right.
So in reference to the futures of the stock market, so you've got futures on S&P 500, you've got futures on NASDAQ, futures on the Dow, futures on the Russell 2000. It's very similar. So these futures are supposed to be made up of all of the S&P 500 stocks, but they're not. It's just I don't quite know what drives. I don't know if the stocks drive the futures or if the futures drive the stocks, but I do know that the amount of money that it takes to make a gigantic swing in these futures markets is not that much money. Like a George Soros or a big wig that we think of like Rothschild, it would be child's play to manipulate these things.
Now, we're talking about say $100 million, $1 billion, or what type of funds would you say, based upon your experience, would be enough to move today as the Dow jumped 800 points at the very closing? What type of funds do you think was needed to pump that up and get that 800-point push?
A couple $100 million in terms of what the buying power would take. Just a couple $100 million would be able to swing. It also depends very much on the volume. So what tends to happen during these times of year is that, a lot of institutions go home and, there aren't as much trading volumes as there typically would be. So that's another big key. And then the biggest key to all of this is obviously we all know that, these things have been injected with artificial stimulus for the past 10 years, quantitative easing, whether it be the Federal Reserve or the Japanese banks or the ECB, all this money is being propped up into this stuff. So now you got the Dow at damn near 30,000, so, and then you couple that with the volatility, like VIX being at 30. So you're just going to see these moves. Like, it's not that far. I'm not saying that it's right, or that it's natural, but it's not that abnormal.
Right. Now, in your opinion, is this what we can expect moving forward? And is this how the new free markets will operate, given we know all of the artificial injection from ever since the Great Recession has been in play heavily? Do you anticipate this type of volatility from here on out, or will we see a spike upward or downward in the next couple weeks, couple months, give or take? What are your thoughts on that?
Personally, I think, and frankly, from my trading standpoint, I hope that the volatility is here to stay. And I know that sounds bad, but like, I thrive on this stuff. The higher the volatility is, the more the things that I sell, they are more expensive. So I want the VIX. That's the number one thing that I look at. So if you're looking at like the VIX at 30, my goodness, like 2 years ago, the VIX it closed below 10, which is totally unheard of. The VIX has only been around since 87, when options markets really took place. Yeah. So it's a new kind of thing, but it's still completely abnormal. So to answer your question, I would say yes, we are going to see moves like this just based upon where the VIX is and based upon how elevated these markets are.
Interesting. Thank you, man. Well, Tate, appreciate you calling in and sharing your expertise, my friend. Thank you. Welcome to the community, buddy.
Thank you so much. I love your show.
Yeah, appreciate it, buddy. Thanks. Yeah, man, that's real talk there, man. It's great to have people who actually are familiar with the markets, the behind the scenes, call in and share their thoughts and give some predictions on how things might pan out. So I appreciate that, Tate. And so let's get back to the chat a little bit. As always, feel free to call in 1-833 LIVE-RTD. Let me know what's on your mind. And so let's get to an article. And it says, I want to make sure I didn't miss any questions. Spirit King says, what happens when the stocks the Fed buy go to zero? So what happens when the stocks the Fed buy go to zero? So when we say the stocks that the Fed buys, so in my opinion, when the Fed gets into the equities markets blatantly, give or take the next couple of major downturns or a flat-out recession, and then there's a tanking of the markets to where there's some type of legislation passed where they're allowed to get into equities directly, I don't foresee the actual stocks going to zero, because at that point they're just going to they're just going to pump funny money into the equities market, where that's where I believe that possibly we can see that 30,000-40,000 Dow, but yet it's going to be literally artificially counterfeit fund injected to where they won't necessarily go to zero, but I think that's in the hyperinflation type territory where actually holding those shares of those companies may not really be worth much a bang to your buck, because I don't think you can actually be able to withdraw, get out of the markets at that point, especially if it's overly inflated like that. So I don't see them going to zero, because the 30 companies that make up the Dow Jones, let me see, of which ExxonMobil I think is one of them. ExxonMobil is an oil company that's global, so they're not going to zero as far as the shares in those companies. So price-wise, I don't know where they would end at as everything's restructured, but I don't see them going to zero. That's just my opinion. If anybody got anything to share on that, feel free to chime in via chat. It says here, it says, Ed, hey Mike, how can I offload silver to gain assets like property, and to whom in coming collapse? Great question, Ed. So how can you offload silver? And so I've actually gathered some information based upon some thoughts that Chris Dwayne shared with me. I think it was about 2 years ago when he joined me here on RTD, and he mentioned about there won't be a need to actually unload your silver, because you can more than likely just keep it in your possession and lease it out or loan it out and still retain the actual physical metal, to where you can either receive revenue off of your metal by putting it out there in somebody's hands, by leasing it out there, to where you may not necessarily have to part ways with your silver. But I personally, in my opinion, wouldn't want to really get rid of the bulk of my silver until there's something that appears to be somewhat stable. And I don't know what that might look like, given that this situation we're in now has never happened on a global scale, and especially being in a digital age. So the new currency that comes here domestically, I still wouldn't trust it, because there's going to be some depreciating of it initially to counteract all that international trade we're going to have to do with domestic or a new Royal Reserve currency. So wouldn't want to get rid of the metals off right away. But that's just my thought. Hello, caller. What's your name? Where you calling from? Hello, caller. What's your name? Where you calling from? Hello? Anybody there? Going once? Going twice? All right. Give me a call back, and we'll try to get you on here. Apologize for that. Let's keep the show moving. It says, James says, Lynette Zhang stated the charts indicate 1800 or below soon. And so 1800 or below, I'm assuming that's a dip, of which I wouldn't doubt it, given the fact that just this Monday it was 800 and half a day, a phony 1,000 recovery as of Wednesday, and then another 800 phony recovery that ended in the green today. So, just to give you my thoughts on what I would anticipate tomorrow, I would anticipate more of the same. The market's going to start off in the red, but there'll be another pump at the last minute, and they're going to try to keep pumping this thing up until they can. But the problem is, I don't foresee a time where it's going to stay in the green as far as them getting 2 or 3 days consecutively of actual positive growth, because once again, I don't think this is actually individuals or institutions behind these spikes. I think it's literally, and even some people on Fox Business mentioned that there are algorithms and machine trading that's doing this last minute pumps, and that's very, very, very dangerous. Very, very dangerous. So feel free to call in and get a couple more people on here. So let's actually open up an article and see what's going on here. All right, so we've got an article here that I want to put out here, and this is the first article. It says, in reference to robotics, it says Toyota wants to put a robot in every home and make it your pal. So this plays into the little bit of snippet I shared today about what we can expect in the days ahead as automation and robotics and artificial intelligence becomes more prevalent and accepted. And so I would anticipate that happening really soon. So we got a couple calls coming in, and I can only get to one at a time. Hello, caller. What's your name? Where you calling from? Hello? All right, let me try to make this work. Got one phone line with multiple calls coming. Hello, caller. What's your name? Where you calling from?
Hi, Mike. It's Russell from Missouri.
Russell from Missouri. How you doing, my friend? What's on your mind this evening?
I'm doing great, thank you. How was your Christmas?
It was excellent, my friend. A lot of good food and gifts and family time. So it was very, very blessed. How was yours?
Same. I had a good time with my kids and family and friends, and just had a great, blessed time. Yeah.
That's good, my friend.
My question is, with all this, I don't know, to me, it's almost obvious manipulation. The market's going down, pumps up by 800. The market's going down, pumps up by 1,000.
Yeah.
Eventually it's gonna, okay, maybe tomorrow it pumps up by 600, and then Monday it can only, maybe they're just kind of a theory, they're getting less for their buck. They're putting the same amount in, and they're getting less benefit.
Yeah.
So okay, being as the American dollar is the world denomination, if you will, the main currency.
Yeah.
How long will the rest of the world accept this, or tell us to stop it, or when is this going to lead to war? Because war has been caused by a lot less than this kind of shit. This kind of stuff.
Right.
So, that's just a thought that I was having tonight as I was listening to you.
Yeah.
I thought, well, eventually break out because of it. What is it going to take for that to happen?
Yeah, good point. Now, I am a firm believer that war is inevitable, and I was actually reading an article today about the Israeli Prime Minister Netanyahu expressing his displeasure in President Trump removing Trump's troops out of Syria without more so consulting with them. So that right there lets me know that as of now, war is on the table, because I can see there being some type of Middle Eastern conflict over the Syria withdrawal of troops, and I wouldn't put it past the powers that be to all of a sudden plant a last-minute false flag or some type of artificial strike or gas bombing or something that blames Assad at the last minute with some major catastrophic event. So with that being the case, I would say war is on the table right now, and if things continue the way they're going as far as the trend downward in the equities market, like I always mentioned, there's always a need of some type of diversion. So I can see war coming sooner than we would have ever imagined. So thank you for sharing that. Or thank you for sharing those thoughts. Hello, caller. What's your name? Where you calling from?
Hello, my name is Gary. Can you hear me, or should I be off a speakerphone?
I hear you, Gary. What's on your mind tonight, my friend? Thanks for calling in.
I think it's a terrific show that you've been doing. I have been watching for quite a while, and I'm glad that you're covering some of this for the economics that are going on right now. I have a question about your thoughts when it comes to the Fort Knox gold, the gold underneath the Fed, things that are away in vaults. Do you see the idea of making that not just auditable, but maybe some kind of public monument made out of that gold that could be locked into the blockchain in some way? Ooh. So then you have public review, you have public knowledge that it actually exists to give some kind of confidence about that national treasure that is shared as a new economy or as a new token.
Man, that's a great thought there. Now, just the first thought that comes to my mind is I don't think it would work in this current point, just because I don't believe that there's actually still the metals. The metals are no longer really in those vaults, whether it be from the article I did a couple weeks ago about the New York vault. There's supposed to be 6,000 tons, and then in Fort Knox another 8,000 tons or whatever the tonnage is supposed to be. I don't think it's no longer there. And so until there's a disruption and a severaging of our government from the Federal Reserve, there's never going to be any type of transparency. And so one thing I believe is underway now is the whole dispute between Trump blaming the Fed. So he's setting the stage up for something that will somewhat expose the Fed as the primary primary reason for the world's problems. And so I hear people mention about him passing the executive order, taking over authority or removing authority from the Feds. And then at that point, if the Fed is no longer in the equation as far as the issuer of our national currency, then I think there could be some type of transparency in the future. But once again, that limits the government's ability to expand and to borrow and to run social programs. So I don't know if they're going to be as transparent as we would need to make it something that our allies and Eastern countries would still trust. So it's a good idea in theory, but I don't see it happening before some type of reset or restructuring. So that's just my thoughts on that. How about yours?
Well, I agree that there would be a reset. I don't see that there's any way to avoid that. And I agree also that loss of faith and confidence in a fiat currency, because so much is hypothecated, rehypothecated, even when it comes to physical gold, if it is in the vault.
Yeah.
So the idea of leverage and all these things like that, I just was thinking about this so seriously last night because I'm involved with a lot of blockchain projects, and that idea of trust. But you hear that people say a token isn't backed up by anything. So the idea might be that you have something like Bitcoin. It may be Bitcoin, it may not be Bitcoin, but something like Bitcoin, and it's anchored. But it's anchored to something that's not hidden in a vault. That's not 2 or 3 people with ability to access and say yes, it's there. But something like a national monument, something that is millions of people come and see the National Washington Monument, or they see the Jefferson Monument. And if there was trust as it was smelted, built in, weighed, assayed, and so forth, you could lock a blockchain token to that and reissue it. It could still be a physical dollar. It could still be a physical reference if you wanted to. But I'm just saying that when people have this combination of I only trust the metal because I can feel it, that doesn't work very easy in a go to the grocery store and throw a gold coin down. It's very difficult. But if we're going to go with a digital life going forward after the collapse, I could see something that's locked to a STO, but it's not just hidden in a vault and Brinks says it's there. Something that you say, wow, there's 20 million people visited Washington Monument, or 20 million people visited this place in the Grand Canyon that has this under guard, but it's millions upon millions of people that are constantly always there to see. It hasn't been molested. It hasn't been changed. Nobody's coming in the middle of the night and chipping off a chunk of it,
Yeah, good point there. Now, I do believe that the blockchain is in the equation as far as it's going to be implemented in the next, side of things and in regards to our economy. Only issue with that is, the blockchain is designed to remove the need for trust amongst entities because it's a public ledger. You can see everything. And I don't think that governments literally they want that type of transparency, because how will they take advantage of and manipulate and basically keep the public in the dark if their business is exposed and the ledger does a good job of accounting for them in reference to the balance sheet of our government's expenditures and assets and that thing. So it sounds good. It will be great, but I don't think that's what they want. I do think they want to put us in some type of crypto-based currency controlled by the banking sector with an unlimited supply that can be created off the whim, and it still has to be fractional reserve based so that they can expand the money, the coin supply at will to benefit them. Now, in reference to your statement about gold-backed coins, my only thing would be, who would control would it be a government-controlled ledger, and then would there be a finite amount of actual coins that can be created? Because if there's only 100 million ounces in the ground or something, will there only be 100 million coins or something to make sure that there's no way of manipulating that? Will be the other thing that I will be concerned about.
Yeah, I agree. And what they're talking about is obviously everybody wants to come up with a stable coin, whether it's a Tether or something that Circle comes up with, or some kind of banking institution that ties it to a dollar. And I think that that's completely flawed. That might be something that we utilize in trading and exchanges when it comes to crypto exchanges. But as far as some sense of stability, because fiat seems to be thought of as a stability, but that won't last. So the idea of hyperinflation or of a deflation of the value purchasing power of the dollar tied to a stable coin, again, I just see that lost, because I've been a gold bug, a silver bug for a long time, and hoarding or trying to invest or trying to pull it out of the fiat system, that's one thing that each of us should be doing. But outside of that, sooner or later, we want to use the conveniences of technology, using blockchain or using our cell phone or being able to email money to people. And I think that bridging that gap between the older generation that says, well, it's not backed by anything. Well, when there's loss in the trust of the government, or there's loss in the fiat that's representing that country, then something's going to have to reestablish it. So I do see that metals would be used, but there's also this fear factor when people are starving that you're going to get robbed, you're going to get thefted, there's no recovery because, money got stolen out of your truck wherever you had it sequestered. So I could see a national trust that's based on the metal, that supposedly those 8,000 tons, if they were in Fort Knox or weren't, and you could still inflate, I wouldn't say inflate, but you could still reset or reference all of the money as it goes into gold, and gold becomes worth, $50,000 or something per ounce,
Well, I believe that the blockchain definitely is in our future, and as always, we're going to find out, but I appreciate you sharing your thoughts. I want to get to this next call, but appreciate you sharing your thoughts this evening, my friend. Thank you.
Thank you.
Have a good evening. Yep. Good stuff as always. Hello, caller. What's your name? Where you calling from?
Hey, Mike. How you doing? It's Brando Commando.
Brando, how you doing, my friend? What's on your mind tonight?
I'm doing great. Hey, I think all your viewers might be tuned in because I'm thinking the same things that everyone's been asking you tonight.
Now, what's that?
All right, so let me see if I can tie it all together. So the first caller said that you can swing the markets with like a few $100 million that someone has laying around, like Soros and those guys. And then your other caller was like, someone in the chat was like, what's the Fed going to do when they're the equities they have run to zero.
Mm-hmm.
I was thinking something along that line.
Yeah.
And then the last caller was talking about the gold, right? And they don't want blockchain being attached to gold because that would make it accountable. And they definitely want to pretend like they have way more gold than is around.
Yeah.
So that they can say the dollar is worth something.
Yeah.
Anyway, so what we're all wondering is who's at the other end holding that bag? Like, if the Fed puts things on their balance sheet, what does that really mean? If the Fed is injecting more capital into the market and inflation's going high, who's making those decisions? So when the Fed owns something on their balance sheet, what does that really mean?
That means they brought they created something out of nothing, and they actually acquired something tangible and real for free. I mean, they get a chance to do whatever they want for free because they're the issuers of the national currency that acquires goods and services. So they end out on the good side of things. Even having all those mortgage-backed securities, they are the primary landowners in reference to mortgages and houses in this country. So, you know, their balance sheet, they can inflate their balance sheet as big as they want, as long as there's people willing to accept those, debits and credits in their bank account, as well as the paper behind it. So that's to their advantage at this current point.
So somebody claims to own this gold, though. Is the Federal Reserve claiming to own this gold?
That I don't know, but here's what I do know. And I, in reading James Ricker's last book in reference to the gold, something about gold, I got halfway through the book, and what startled me or caught me off guard was that in the book he referenced that the physical gold that's in the vaults all have claims to them because in 1933 it was removed from the people, and the Federal Reserve banks collected the gold, and the government received that gold, but the government gave them the gold certificates as a receipt to that gold. So technically speaking, according to what I read in James Ricker's books, the Federal Reserve still has gold certificates on their balance sheet somewhere as a claim to a good portion of that gold that I guess they have a claim to. So all the gold in Fort Knox, to my knowledge, has claims in reference to those gold certificates that are on the Fed's balance sheet or in their books somewhere. And so when they close the window just at the right amount that equal what was held in certificates on the Federal Reserve's balance sheet, which led me to believe, after I finished reading that in that book, was that the Federal Reserve actually owns that gold or has a claim to it because they have the physical piece of paper that said, redeemable in gold and certificates in their possession. So that's one thing I don't quite have wrapped up, but when I read that in that book, it made me think about the idea that perhaps that 8,000 tons, the window was closed at that amount because it belongs or hedged or partially owned by the Fed. So I don't know, but I've never had Jim Rickers on to actually ask him that. But from his book, it lets me know that 8,000 tons that was supposed to be there has something to do with the Fed as well. So it's just not solely our goal as we the people. So, but I don't know. But that's just what I read.
That's a great story, man. I love to read all about that stuff. I want to really dive into The Creature from Jekyll Island. I hear it's a good book.
Yeah, I haven't gotten that because it's kind of thick. But what I'll do is tomorrow I'll extract that little portion I was referencing, and I'll make sure I read it again. But I'm pretty sure I read it correct the first time, according to the way James Rickers described it in his book. So I'm not sure. It's the Gold book, one of his second from last book. But I got all his books. But it's definitely something that had me thinking that perhaps that gold that's in the vaults is not solely we the people's, but yet they didn't tell us the part about the certificates that were claims to those papers as well that the Fed has. So, but it is what it is, man. But Brando, thank you for calling in, my friend. Appreciate you.
All right, thanks a lot, Mike.
All right,
have a great New Year.
Yep, you too, buddy.
All right, thanks a lot, buddy.
Yep. Yeah, man, good stuff as always. And that's one thing, just to touch on that briefly. About what I read in the book. It's the Gold book. I'm not sure which one it is, but one of James Ricker's books on gold, The Case for Gold or something. In that book, when I read those statements about the certificates that's still attached to that gold that the Federal Reserve has is a claim to the gold Fort Knox, I read that. It threw me off completely. So I never looked into it any further, but based upon what I read, it lets me know that gold to Fort Knox is not 100%, free and clear as far as it being we the peoples, if it's still there. So, but yeah, appreciate the calls, my friends. Feel free to call in again. We got a couple more minutes on here, then we're going to get off for this evening. The new case for gold, James, great point. If I had the book here, I would open it up and go to the page so I can show you guys, but I don't have it handy here, but I'll definitely dive into it. Couple more calls. Hello, caller. What's your name? Where you calling from? Hello? Anybody there? Hello, caller. What's your name? Where you calling from? Hello?
Mike?
Yep. Hey there.
Good. Sorry, I don't have a good connection out here. Tim from Colorado.
Tim, how you doing, my friend? What's on your mind tonight?
Good. First thing I wanted to say is I very rarely disagree with you. I'm almost always in total concurrence, and thank you for all your service to your followers.
Thank you, my
and
friend.
Your good advice.
Appreciate you.
The one thing I do probably disagree with you on is the central banking, Federal Reserve, whatever you want to call it, not participating in buying stocks.
Mm-hmm. Yeah.
I believe that you were thinking legally they can't do that, but there is no law anymore, and that's what the plunge protection team is, right? With the exchange stabilization fund.
So I'm not 100% sure on that, but yes, since I got you on here, we can look it up and find out exactly how it might be worded, because apart from initially that being established thereafter the Great Depression, let me pull this up here. So the Exchange Stabilization Fund was established after the Great Depression, and it was a pool of currency that was set aside to help control the markets in this type of scenario here. So I don't know the full-fledged details of it, but I can find out right now. So it says, let me pull this up right here just to give me a little background here. It says Working Group on Financial Markets. It says the Plunge Protection Team was created in Executive Order 12631 in 1988 by the United States President Ronald Reagan. It established an executive order of the working group that had 3 purposes and functions. One was major issues raised by numerous studies of 2 actions, including government actions using under existing laws and recommendations, appropriate, whatever. So yeah, it might be a little bit much to read this all, but Plunge Protection Team. So, but go ahead and finish your statement. I'll dive into this further. Go ahead, finish your statement.
That's fine. But basically, we're dealing with people far worse than the mob. Mm-hmm. They run the world, and there are no rules except we're in trouble. Mm. And as far as the gold and backing anything and trusting these people to back anything that's not 100% redeemable on demand instantaneously is going to be a lie. And they're going to push us into a cryptocurrency, a stable coin, a Fed Reserve, as we've discussed before, and then they're going to make everything else illegal, and it's all backed by force.
Yeah.
So I think I agree with you, and everybody should really listen to you, because you can listen to a lot of other speakers' podcasts. They have a lot of great stuff, but you're really versatile, and you take calls, and so you jump all over the place,
Thank you,
sir.
So
anyway, anybody that listens to you, I highly recommend they listen closely.
Well, appreciate it, but thanks for the support as always, my friend. Have a good evening.
Okay. Have a great night.
Yeah,
Thank
you too. Yeah, man, appreciate the support, Tim, there. Yeah, so I'm trying to look up more details into the Exchange Stabilization Fund just to go a little deeper into it, because I'm curious to find out exactly how everything is laid out. So I got it, got some things here. Okay, so here we go. So here is Exchange Stabilization Fund is an emergency reserve fund of the United States government, Treasury Department, normally used for foreign exchange intervention. Says arrangement allows the U.S. government to influence currency exchange rate without affecting domestic money supply. So according to the ESF, it's for currency related. And so let's go back a little further. It says USF was established as a provision in the Gold Reserve Act, and it was intended to respond to Britain's exchange equalization account. The fund began operations in 1934, financed by $2 billion. So if this pot of funds is what is being used now for the current propping up of the equities market, then that could be a case, but I don't think so. Hello, caller. What's your name? Where you calling from?
Hi, how you doing, man? My name is Nigel.
How you doing, Nigel? What's on your mind tonight? Appreciate you calling, buddy.
I'm calling from Los Angeles in California.
Okay, sounds good. Well, welcome to the show tonight. What's on your mind?
Okay, but I was born and raised in a small country in Southern Africa. It's called Zimbabwe. I don't know if you're aware of it.
Yes, sir. I've covered it a little bit, and I even had a economist, John, I think it's economist named Robertson, who's actually in Zimbabwe, on the show a while back. And I've had, speaking of which, I got a book right here in front of me called "When Money Destroys Nations," about the situation in Zimbabwe. So, but go ahead, shine some light on us for us.
Okay, so what I would just want to ask you is two things. I don't know if you're aware of the background and how Zimbabwe got to where we are right now.
Mm-hmm.
So, but we dollarized a few years ago, 2008.
Yeah.
Right? So it was practically a dollar economy, and the government was paying all the workers in dollars. You could go to the bank and you could get your dollars.
Yeah.
So then what happened after that was the government discovered that, you know what, we actually don't need to have the physical dollars. We can just deposit electronic dollars by issuing treasury bills.
Yeah. Yeah.
So I think something similar happened in Argentina. I'm sure you're aware of that as well.
Yeah.
When the peso used to be pegged to the dollar.
Mm-hmm.
So basically what they did is they went and issued out, I think it's now the balance is sitting close to about $10 billion of electronic cash that is not backed by physical cash.
Yeah, that we've talked about with Zimbabwe still, correct?
Yes.
And so
my question is,
yeah,
how can they get out of that mess? What's the best way to get rid of the electronic dollars so that what's in the banking system electronically is what the real is backed by real
physical
paper money?
Yeah, and so so in my opinion, because I would imagine that the digital ledger dollars in your country is probably pegged and attached to the physical paper, that the bond notes that's now in circulation in your country. And so I think that them trying to issue those bond notes is their way of saying that, you know, they have, I recall them having so-called dollar reserves in other banks outside the country as a insurance policy against them issuing those bond notes there. But the problem is, because the government is always in need of more currency to fund themselves, I don't think there's no way of actually pegging those digital ledgers on their balance sheet that they put out into the public's hands with something physical, because you guys can't print Federal Reserve notes, but you can print bond notes. So there is no resolving that issue from the digital to the paper, because you guys don't have a Federal Reserve printing press in your country. So they will never balance out, in my opinion.
So what if they start to buy back the electronic balances by giving the people and getting rid of them gradually? Will that work?
It could work, but the question is, where will those funds come from? Because they'll actually need physical dollars to then make them redeemable for those digital dollars. And I would imagine that they're continuing to expand the digital balance in the reserve bank as well as in the commercial banks, because your commercial banks are the ones that's through fractional reserve banking probably has $1 in their vault, but yet are lending out $90 on top of that. So because of fractional reserve banking, I don't think that idea of making it one-to-one peg was ever really something they were even thinking about doing, because it's not possible, because debt has to be brought into existence. Yeah.
What's the difference between, because when I was doing my master's, we looked at all the other times in history, and I also learned that here in the United States, like what you're talking about earlier, they hold fractional reserves, right?
Yeah.
The banks.
Yeah.
So what's the difference? So meaning that in the United States of America, we might have an economy with 12 trillion, but doesn't mean that we've got 12 trillion actually physical notes. Most of it is electronic.
Correct.
And around about 10% or so, right?
Right. So
that's the world average.
So as of now, go ahead.
So what's the difference between how does the United States manage to get away with that, and then other countries can't?
All right, because the answer to that is because the Federal Reserve note is the world reserve currency, and because of the petrodollar system, because the world needs Federal Reserve notes and treasuries, debt instruments in their savings accounts in order to do transactions in the oil markets and in international trade. So because the world needs Federal Reserve notes at this current moment, they're always going to be in demand, which has allowed the U.S. to run a deficit for the last umpteen years. And it's basically saying that we here have the privilege of having a printing press that the world still accepts as good as gold, if I can say it in that sense. But being the world reserve currency has given us here the privilege to be able to export debt and consume consumer goods and other people's labor at cheap costs. And that's why all this stuff is starting to come to an end. But it's because of the reserve status, which is being challenged right now with all the people out in the Eastern Hemisphere that, have plans outside of using Federal Reserve notes. Hence the idea of the show, Rethinking the Dollar.
Okay.
But yeah, man, I appreciate your calling, my friend. So have you?
Thank you so much.
How long have you been here? Do you still have family and friends in Zimbabwe?
Yeah, I do. I'm actually going back to Zimbabwe in 2 weeks' time. All my family's there.
Yeah.
I've been here for about 2.5 years.
Mm-hmm. Okay.
Working out here in LA. I came for my master's and I finished and I'm now working. So
yeah. Good deal, man. Well, be blessed, man. Definitely, when you get back home, feel free to give us a call and give us some insights from the ground. I would love to find out more what's happening inside your country.
Okay, definitely. I'll be doing a vlog as well. I can send you guys a link.
Good deal.
On my trip.
Please do, yeah, do that.
Thank you so much.
If you got a channel or something like that, let me know and I'll support the channel and let the people know where to find you at.
Oh, yeah, definitely. I'll drop you, and I've got all your contacts. I'll drop you an email.
Sounds good. All right, my friend. Have a good one. Be blessed.
Thank you, man. Bye.
Yeah, bye-bye. Yeah, man. Good stuff as always. But people, as always, we're up on our time slot coming down the home stretch. So I appreciate everybody chiming in via chat, man, and all the calls and support to this evening. Has been great having a chance to connect with everybody. And as always, you guys know how you can find out more about what's going on and support the channel. We got a couple t-shirts over here if you guys want to get involved with that, as well as some links and things of that nature down below to get your weight up. More importantly, as always, as all this digital stuff comes to an end and they return to their intrinsic value, you know what will not, and that's physical metal. So definitely get your weight up. And more importantly, if you guys have enjoyed the back and forth, don't be afraid to click the thumbs up button. It won't do you no harm to click that button to allow more people to find us here in the RTD community so we can get more newcomers in here and get them informed as to what's important and what matters as far as the economy. But I want to end on just some more thoughts on what we can anticipate for tomorrow's equities market. I believe that it's going to be the same as today. It's going to start off in the green, and then I think tomorrow might be another 1,000-point rally at the very end. It just seems like that seems to be the trend now because the algorithms and the machine trading, whatever it is doing all this last-minute buying, is going to be doing this for the rest of this year especially, and God forbid heading into the new year where it's good to say that between now and middle of January, everybody and their mother will get tired of seeing market dips and drops and just this equity situation being a main subject on mainstream news sources, to where you're going to have more people starting to pull out their resources. And then I'm going to leave you with this article right here to let you know that it's already underway. And so here we have an article says fund investors pull $56 billion in the biggest exit since 2008. So it's just talking about how a mutual fund, a hedge fund company rather, just basically cashed out $56 billion just over the last couple of weeks, as this December is considered the worst equities month of the entire century or something of that nature. So this is just a sign that people are pulling themselves out of these systems. So just something to keep in mind for those that are still in the markets. And if you're willing to trade and do what you do, feel free to do such. But I don't believe in gambling, so I'm going to get my butt out, or was never really in. But anyway, getting my weight up and doing everything else I enjoy. But more importantly, staying prayed up and enjoying the remainder of my days here on this planet. Thanking God for every minute of it. Be safe, be blessed, and I'll see you guys later.